Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.
This segment we're calling Should I Do That? Making sense of expert financial advice. Now, this article comes from Bloomberg. So we thought we'd have a little fun here, and we're going to evaluate the quality of the advice. There's all these articles out here, right, Jesse? That's like what you should do with $1,000, or
in fact, you can go to Bloomberg right now and you can toggle it between three articles: what to do with $10,000, what to do with $100,000, what to do with $1 million. And if you're taking advice on what to do with $1 million from a Bloomberg article, maybe you should talk to a professional. But moving forward,
we should tell people that we have kind of a rule, not a rule. It's kind of a tongue-in-cheek rule. If it's on the cover of a magazine, don't do it.
Don't do it.
Don't fall for it. We used to collect when I was a young advisor. I used to look at magazine covers, and usually they were, it was Money Magazine, or if it was some other magazine that was basically promoting the next hot stock. And without exception, oftentimes we could look at that stock 6 months later and see how much it had gone down.
Well, it's an oxymoron right in itself, because the whole point of a hot stock is nobody knows about it.
That's right. So when you tell everybody about it, it's no longer a hot stock. All right, so here we go. This is an article from Bloomberg.
It's called,
what was the title?
It's called Ask 6 Wealth Advisors Where to Invest $100,000 Right Now.
Okay, so these are experts, and I have my air quotes going here. These are experts in financial advice. We're going to critique the advice. Here we go.
Okay. Our first individual says, dollar cost average into large caps, focus on value, and look at high dividend, low volatility ETFs.
Okay. Well, that could be advice, but what does this expert know about our listeners?
Nothing.
Absolutely nothing. Right. So it could be that they're trying to push certain types of mutual funds. It doesn't say if they're a mutual fund advisor or an ETF advisor, but dollar cost averaging is not in itself a bad idea, right?
Not at all, no.
Why don't you explain dollar cost averaging real quick?
That's just where you buy in to a security over time, and your price is going to vary, whether it's up or down, but over time, your dollar cost is going to be an average somewhere in the middle, and it's probably going to benefit you in the long run. But it's a very long-term strategy, for people investing once a month, more money, that type of thing.
Okay. So it sometimes you're buying high, sometimes you're buying low, but over time you actually get a better price.
Right.
Okay. So dollar cost averaging itself is not a bad thing.
No, and neither is value, and neither is high dividend, low volatility ETF. That's a very specific niche within the world of ETFs, but that doesn't necessarily mean that you should do that or avoid it. Like what Mark was saying, this is somebody who might be an expert, but they don't know about you. So,
and if you notice, folks, the theme that we're going to be covering here today is you need to get personalized advice, personalized advice about your specific financial situation,
right?
Because no one knows you better than you. So dollar cost averaging, not a bad thing to do. And we recommend that for a lot of people that are trying to decide, should I stay in? Should I get out of the market? And we encourage those folks that are, in their 401k and things like that, just stay with the plan, keep doing what they're doing, and dollar cost averaging is a way to do that.
Sure. So let's move on to our second expert. You will find in this article if you look it up, but my little summary of that here says, this person says, to use an interval fund, look at private equity, place importance on diversification, And this person says a reasonable alternative to private equity would be a microcap ETF, which is about as narrow as it gets.
Yeah. Once again, this advisor knows our listeners how. You don't. Now, that may be great advice for a very specific person, but most of us are not going to have access to private equity.
Mm-hmm.
Now, interval funds are a different type of mutual fund, and they have special rules and regulations on them, and they're not suitable for everyone. So,
Special is a very positive word. I would say they have strict rules.
yeah, they have. That's right. They have strict rules. And so, once again, this expert advisor is giving advice on something that probably is only really available to the super wealthy.
Mm-hmm.
All right, what's next?
So our third expert in the financial world from Wall Street says, follow a disciplined rebalancing strategy with growth ETFs.
So this brings up an interesting concept, because the whole concept, when you're dealing with most of the financial industry, which follows modern portfolio theory for management of your investments, and that is, we're going to systematically rebalance our portfolio. And this is how it works. When something is doing really well, we're going to sell part of that portfolio and buy some stuff that's not doing well. Makes perfect sense. I want to sell the stuff that's doing well and outperforming and buy stuff that's underperforming. Well, right now, almost every asset class is underperforming in the markets, except for maybe utilities or energy right now. Okay. And energy's really taken a hit in the last 45 days.
Right.
So basically we're following that modern portfolio theory, or this expert is following that modern portfolio theory just to rebalance, because it'll all work out.
Is that a really fancy way to say buy the dip?
Well, it kind of is, but we don't prescribe to that.
No.
So once again, I think this is a flawed piece of advice given by our quote, and I've got my air quotes up now, expert advice. So anyway, all right, let's go on to the next one, because these are fun, and we kind of get the theme here going here. Go ahead.
It's interesting to talk about it too. So our fourth expert says, focus on military and defense spending, energy, and cybersecurity. With geopolitical tensions being so high, these sectors will create a need and create value for you.
You know, sometimes, Jesse, I just wonder. I wonder if these expert advisors don't have a clue as to what's going on with the economy.
They just see headlines about Russia.
Maybe so. And it's really amazing. You really, folks, you really want to be working with an advisor. And this is not to plug us or anything. This is just important that you work with a Christian financial advisor that shares your values. And this is probably a good time to promote Kingdom Advisors. There are a number of Kingdom Advisor certified advisors around Central Texas. And you just have to go to kingdomadvisors.com to look for one that's near you. But you want to make sure that your advisor is not guessing. And this is really, there's a little bit of guessing going on here with each of these bits of expert advice. Are we going to be increasing military and defense spending? I don't know. It seems like right now the things that are on Capitol Hill is the Inflation Reduction Act, which we'll talk about in the next segment. That's funny. It doesn't mean IRAs, and it doesn't mean that they're going to reduce inflation. So, that's why these experts, they're just trying to get attention. And quite frankly, Jesse, one of the things that we get approached on a monthly basis, somebody that's a quote journalist or a writer is approaching us to ask us to see if we want to be in Bloomberg, or if we want to be in the Wall Street Journal. And of course, we have to pay for that privilege. And this is where these folks are getting these expert opinions from these expert advisors. Now, for those of you that are listening on the radio, you don't know that I'm putting my air quotes up here when I say expert. The point is they don't know you personally. You don't know whether or not that really applies to you. And so this is kind of the dilemma here when we read these articles. We just kind of laugh at them and say, oh, that's interesting.
Well, imagine a doctor that prescribes the same medicine to every patient.
Yeah. And it's kind of the old adage if the only tool that I have is a hammer, everything looks like a nail,
Mm,
right?
right.
And so a lot of times, if you're working with the typical, well, I don't want to say typical. If you're working with a financial advisor that sees everything as a nail because all they have is a hammer, you're going to get the same thing. And so, we have to be careful about these things. What's the last one there, Jesse? Because I think this is one that I think is
Well,
kind of funny.
we've actually got two more, but we'll
Okay.
cover this one really quick. This expert says that defense sectors are at peak valuation, so look for growth elsewhere and use a 1 to 3 year judgment to determine your exposure to large cap and small cap.
Okay. Well, our average listener really knows what they're talking about there. So, folks, I think the gist of this segment and our little game show here, should I do that? Making sense of expert financial advice. And of course, expert is in our air quotes here. You need to make sure that you are getting specific individual advice that applies to your unique situation. And the only way to do that is to really enlist the services of a trusted financial advisor. We kind of lean towards wanting to work with our certified Kingdom advisors. You can find one in your area at kingdomadvisors.com.